Ladies and gentlemen, open banking pioneers, a very, very warm welcome from Riyadh. I'm with Accenture, working with a wonderful team at Saudi Payments to launch open banking. We know that the UK has created the blueprint for open banking, and we also know that the eyes of the world are now looking at our familia in Brazil and marvelling at the phenomenal pace of their delivery. I forecast that we will soon, and very soon, be watching the Kingdom of Saudi Arabia. So you heard it here first. I'd like to take this opportunity to thank Saudi Payments for their incredible warmth and hospitality. I genuinely can't wait to return. So we're all gathered around our campfire to talk about buy now, pay later. So let me start by showing a little bit about buy now, pay later in the Middle East, because this was a learning for me. In Saudi and EAU, Tabi is the largest provider, providing credit through both an in-store and online channel. Now, the customer journey is a little different, I've learned. ID checking is done on a national ID card. Credit is allocated using your credit card as the method of payment. So you get the first 3 months free, and then if you haven't paid in 3 months, you get the first month free of interest, sorry. If you haven't paid in 3 months, then your normal credit rate kicks in as you've already agreed to pay on your credit card. Okay, so that's what happens in the Middle East. So let's have a look at the market, both first in the UK and then globally. So this is a form of unregulated, and that's a key word at the moment, and that's just a current state of the market. An unregulated interest-free credit has enjoyed an explosive growth and a lot of that has been due to the pandemic, and particularly in the demographic for under 30s and those on tight finance. Now, all of a sudden, that is, just looking at those demographics, it's going to raise some questions. So the speed of adoption has been absolutely remarkable, with 92% of merchants surveyed having integrated their buy now, pay later solution in the early part of the pandemic. So clearly the pandemic was a trigger. So I'm going to come back to retailers and some of the challenges they're going to face in a moment. But OB, we love to share the facts and the data with you. So let's have a look at the market size. In the UK, and these figures I find, jaw-dropping, buy now, pay later transactions in 2020 quadrupled. Okay, so we are seeing big step changes, quadrupled from the previous year to 2.7 billion of transactions. In 2021, that more than doubled from the previous year to 5.7 billion of transactions. And this is in an unregulated market. So active users in the UK, we have over 12 million people now actively using buy now, pay later. That says something about maybe market education, our economic state. Well, let's have a look at what it says, okay? Nearly 1 in 10 people have used buy now, pay later. And that fact came from Hargreaves Lansdown and was correct at the time we looked at it, which was two or 3 days ago. So globally, let's have a look. We're a global community of over 17,000 now. So let's have a look at the global state. So globally, buy now, pay later is worth, just jaw-dropping, 125 billion. That's 125 billion. This is projected to reach 680 billion by 2025. And then I've got some figures in front of me, but 3.98 trillion by 2030. It's just a phenomenal growth figure. Now, you've had all that tsunami of numbers, which I've already said, I just think are jaw-dropping. In today's campfire, what we're going to have is a very honest look at the market, the implications of such market growth as buy now, pay later becomes an integral part of customers' wallets. There's the issue around who owns the data. Is it the buy now, pay later platform that you've onboarded through, or is it the consumer? And I think this is going to be a hot topic in the future. And I think you will be talking a lot about this. This is an emerging theme. But one thing I have found, and the team at OBE have found, and I just want to share this with you for a moment, is whenever you talk about buy now, pay later, the conversation is often split, like an Oxford Union debate. You know, you get the fors and the against. And it has OBE has been here for 3 years, and James was part of the beginning of our journey. So 3 years, and this has to be the most provocative, behind the scenes preparation that we have ever done. We have talked to MPs. 70 of them are legislating for buy now, pay later data. Unfortunately, there was a diary clash and they couldn't make it. We've spoken to the biggest players in the market. It's interesting to see that they're not here, and I'll leave that one. Okay, so let's have a look at the benefits and criticisms. And there are a lot of criticisms in the marketplace, and I think it's about time that the regulation sort of leveled this one out. And I think that will give a real calmness to the marketplace. On one hand, you know, you've got buy now, pay later, unlocking the purchasing power and helping customers manage their finances by accessing, you know, they can buy low-cost goods on finance. Is that right? Should people in 2022 in the UK, albeit I'm talking to you from Riyadh, but should they be buying food on interest credit? You know, I think we can do better than that as a nation myself, but there you go. The buy now, pay later platform has significantly sort of grown through this pandemic, and we need to have a look at that and some of the implications on data, on legislation, on all elements of the market, particularly financial inclusion. So the government, as I said, has planned to bring in some regulation. So I'm interested to hear from Faith Reynolds on this, and who's an awesome advocate for fairer finance and financial inclusion. Now, we have a 3-part campfire today, and it is my absolute privilege to be able to introduce you to some fintechs that you maybe haven't heard before. And I think you'll be hearing a lot about them in the coming months and the coming years. So the first part of our three-part campfire is a fireside chat and discussion. So this is something I have been looking forward to. And then we have a provocative, and I hope it's going to be as hot as the Saudi weather, panel discussion. And then we have our shining a spotlight. And we're bringing this feature back because we like it. It's a privilege to be able to shine that spotlight on thriving fintech. So there's those rapid fire questions for somebody to share a little bit more about their business case and how they see the market. Okay, so without further ado, what I would like to do is to pass the mic over to two amazing females. We have Anna from the papers. She is our guest host today, and she starts us off with a fireside chat from Ayana from ClearPay. So ladies, over to you. Anna, the mic is all yours. Have fun, and I will touch base with you all at the end of this session. Good luck, everybody. And please, if the prep is anything to go by, this is going to be provocative. Anna, make it happen.
Hi, everyone. Helen, thank you so much for the kind introduction. I'm very grateful for the invite. So just a little bit about myself. My name is Wanai Freeman. I'm a lead editor at The Papers. For those who are not familiar with the company, we are a media platform specialized in payments and commerce. And of course, Buy Now Pay Later is at the very core of our agenda, and I'm really happy to be part of the discussion today. So without further ado, our first guest is Ayana Vidal, who is Director of Public Policy and Regulatory Affairs at ClearPay. Thank you so much for joining us today, Ayana.
Thank you for having me. It's a real pleasure to be speaking to the OBE audience today.
All right, thanks so much. And just to kick it off, can you give us a brief history of Buy Now Pay Later and how these products actually work?
Sure. So Buy Now Pay Later is based on a really simple premise that I think Helen touched on quite well. It allows customers to spread the cost of a purchase over a short period of time without incurring any interest. ClearPay, Afterpay globally, is one of the pioneers of this product or style of spending. So we were co-founded in Australia in 2014 by Nick Molnar and Anthony Eisen. And they really responded to a growing customer need, driven especially by younger people who wanted a payment option that provided them with the same flexibility to manage their money and budget properly. But there was a real sort of concern and anxiety around credit cards and revolving debt, hidden charges and fees, especially post the global financial crisis. So Buy Now Pay Later was born out of this idea that people would want to spread their own money over a short period of time in order to smooth those purchases and be able to budget responsibly. ClearPay has one simple product. It's pay in full over 6 weeks. And this service is free for a consumer if they pay on time, as we make our revenue from partnering with merchants. And globally, we have over 20 million customers, and we have partnerships with over 144,000 merchants. So this is, as Helen said, this is a really big business. Our business model is really good inbuilt consumer protection. So it works very differently to traditional credit, like a credit card. If a customer misses a payment on ClearPay, their account is paused and they can't spend any more money on the platform. We provide consumers with indicative spending limits, but they're not guaranteed. And they're informed by our risk profiles, but every transaction that's made through ClearPay is assessed in real time. So in this, in this approach, we aren't providing customers with a long line of credit that they can revolve in for months and years. This is literally a mechanism to provide them with the means to buy what they want to buy within a short period of time and then pay it back. And obviously the value of this is very clear, as you can see from the customer and merchant numbers. We know that our customers really value this because we did some work with Accenture actually towards the end of last year, where we found that 1 in 5 ClearPay customers has actually stopped using credit cards altogether since they came on the platform, and 2 in 5 have reduced their credit card spending. So we're definitely seeing that growth. And to give you a few UK figures, BNPL is about 5% of e-commerce in the UK at the moment, or was when it was last checked in 2020. But the current growth rate, we could expect that to be about 10% by 2024. So there is a significant growth. It's still a small part of the e-commerce market, but the trend is definitely there. And obviously with younger people and millennials being the pioneers, millennials and Gen Z being the pioneers of how to use this products, we'll definitely see that growth over time. But one of the really great things is that the average age of a customer of Buy Now Pay Later is growing. It's now around 35, and older generations are sort of the fastest growing category of customer, especially as we move into newer verticals outside of what we all know, like apparel and footwear and beauty, to things like household or garden purchases, or things like travel. So it's a really fast growing category. Hopefully that gives people an overview of what Buy Now Pay Later is and how it's sort of shaping up in the UK.
Well, thank you. Excellent, Diana. And now, yeah, I know that this is basically on everyone's mind, and I think regulation is very much a very debated topic when it comes to Buy Now Pay Later. Maybe can you tell us more about your thoughts regarding HM's Treasury's proposal to regulate Buy Now Pay Later?
Yeah, so we sort of welcome the steps to introduce regulation, and we're expecting to hear from the government any day now, following their consultation that closed earlier this year, as to what they think the regulatory regime should look like, which companies should be in scope, and how those rules should be applied. Given the popularity of the product, as I've just set out, it feels like now is the right time to put those rules in place and really protect consumers, but also maintain a really competitive, innovative credit market. I think it's really important to say that this product has grown because customers are choosing it. They're voting with their feet, and they're saying, we really think that this is the future. So it's important that this is maintained, especially with Buy Now Pay Later being an affordable and lower risk option for the more traditional forms of credit, like a credit card that has interest on top. We, as I said, already have a number of measures that we implement to protect and support customers, such as pausing accounts if a customer misses a payment. But we do feel that there is this regulation can bring in the right standards and really codify that across the industry, so that all firms that are delivering these sorts of services are delivering the right value and benefit for customers. And there are a couple of things that the government has sort of said they want to do that we're very supportive of. such as extending Section 75 cover to buy now, pay later agreements. At the moment, they apply to credit cards, but applying them to buy now, pay later agreements will actually, we think, improve the value of the product and the service for consumers, and having access to the financial ombudsman service, which again will provide, a fair and consistent approach for customers across the industry, where they know they have an independent third-party arbitrator there if they want to escalate a complaint.
Excellent, thank you. So the future looks bright. And in your opinion, if you were to look at the ideal regulation when it comes to buy now, pay later, what in your opinion would look like would be a good outcome for the consumer from buy now, pay later regulation? What's there to be done?
So I think a good outcome would really focus on providing the right outcomes for customers, ensuring that they are protected, and also allowing for that innovation, as I said. And I think one of the challenges we have is that our consumer credit regulatory model is based on quite old thinking. It's based on the Consumer Credit Act that was passed in 1974. So it's born out of models that are sort of older now, and buy now, pay later doesn't quite fit within the categories and the sort of the regulations that we've got at the moment. So we're really looking to the government and to regulators and to the industry as well to have really bold thinking about what that looks like, to understand the nuances of buy now, pay later, to understand how customers are using it, and then to build a really good bespoke system that is almost future-proof for that growth and innovation that we'll see, that takes into consideration how customers are using the product, and so they don't experience a detriment from choosing buy now, pay later over something like a credit card, for example. And one of the things that I'm most passionate about, that I talk to people quite a bit about, is that we have a number of younger people who are using buy now, pay later as an alternative to credit cards, but anyone who is applying for a mortgage at some point in their life will know that you're often told to build a good credit profile and a good credit score, you need to have a credit card to show providers that you're a good credit risk. We definitely see that there's going to be a mismatch if we don't find a way or a mechanism for people to use their buy now, pay later agreements to build positive credit scores in the future. So to have that positive repayment behaviour showing up in the right way, to give them that opportunity to apply for greater amounts of credit. And I think that as the age of our customers grows, we need to think about this more and more. So what I'm hoping to see, and obviously I know it's a real hot topic within the industry and within government and regulators as well, is a mechanism to allow people who are using this as an alternative credit cards still access the same benefits that you would see from a credit card over time.
Thanks so much. And if you were to look at the target groups, so you mentioned the younger consumers. So what else is to be mentioned here when you talk about the target groups?
So I think it's really interesting that where buy now, pay later has grown has been in the verticals or in the sectors that are most sort of that younger people are used to sort of shopping and spending in. But as I said, that is changing, especially as older customers are now sort of becoming the next wave of adopters. I guess one of the challenges that we see, or the criticisms of the sector, is that younger people might not understand what they're doing when they accept a buy now, pay later agreement. They might not understand that they're taking out credit. And I think one of the things from our perspective that's really important to say is that we feel that the engagement that we have with customers is actually more appropriate than what you would see from a traditional credit provider. So we actually have more engagement with them. We have a regular sort of cadence of emails and text messages to remind customers about payment dates. But most importantly, I feel that we provide the right information for a customer at the right time, enough for them to make a decision about ClearPay prior to checking out, but not enough that it overwhelms them. So I think everyone's had an experience of being shown some terms and conditions when you download a new app onto your iPhone or whatever, and you get a long list of sort of conditions and what have you, and everyone just scrolls to the bottom and clicks accept, because actually the process of reading through that isn't something that anyone really wants to engage with. If we find regulation is building that into buy now, pay later, then actually it's going to confuse customers even more, and they're going to not understand what they're doing. So we feel that actually what we do in providing information about how much the customer is paying today, how much they'll pay in the future, that the agreement represents credit, and also that late fees might apply, if they fail to make a payment. That is a decent amount of information to provide to a customer at that point when they're making the purchase. And obviously you link to terms and conditions and things within that and afterwards. But we really want to make sure that regulation doesn't draw on older models of communicating with customers and providing the information to sit onto this new form that we know actually customers are most engaged by.
Fantastic. Thank you so much, Ayana, and thank you for getting this campfire started with your knowledge and insights. And we'll make sure to keep a close watch on all developments in the future. But I'm pretty sure that there's a lot to keep a close watch on. And thanks so much for joining us today.
Thank you for having me.
And now, as Helen mentioned, we have a world-class panel to discuss all things buy now, pay later. So today's panel includes James Varga, CEO and founder at Direct ID, Faith Reynolds, strategic advisor at the Finance Innovation Lab, Edward Brandler, co-founder at TWO, Mike Kilati, CEO at Lenderon, Misa Zivik, CEO and co-founder at LeanPay, and Joanne Owens, partner at Eversheet Sutherland. So thank you all for joining us. So I would have a question that I would really like to jump right into. So we were all wondering, what is the current status of rules around buy now, pay later, and how do you think upcoming rules can shape the buy now, pay later space? So maybe, Joanne, if I could start with you, could you please give your perspective on that?
Yeah, hi, thanks Anna, and nice to meet everyone. Thanks for having me here. So in terms of the UK market, it's already been mentioned during the discussion, but at least from a financial services perspective, the buy now, pay later product we're talking about is an unregulated product. That's not to say that there isn't any regulation that applies to it, and there's certainly consumer protection legislation that would apply to the product. And we've already seen the FCA, so our Financial Conduct Authority, use those consumer protection powers to take action in respect of terms and conditions. And there's also oversight in terms of Advertising Standards Authority guidance in the way that buy now, pay later is marketed, and the fact that it needs to be clear that it's a form of credit. So it is unregulated from an FS perspective, but it's not completely unregulated as a product in the UK. In terms of where we're headed, there was a big review undertaken a couple of years ago called the Woolard Review. It looked at the unsecured credit market as a whole and made a number of recommendations across the sector. But one of the urgent recommendations that was made was that buy now, pay later needed to be urgently regulated, and therefore it placed a recommendation on the government to take that forward, and that's what's happening. So we've already mentioned the government consultation that closed. We're now waiting for government feedback in terms of that consultation. But in essence, the aim is to bring buy now, pay later into the regulated credit space. What that means is that our Financial Conduct Authority would have regulatory oversight of the lenders operating in that space. They would have to become authorised by the FCA, and there would be a number of conduct of business requirements that would therefore apply to the product. So as it stands, we're waiting for government feedback. Once that comes in, we'll have a better picture of how the government is at least proposing to regulate, and then we'll be in the hands of the Financial Conduct Authority in terms of what it wants to do around the bits that it's responsible for. The buzzword in all of this is proportionality. The government's very keen to make clear that it wants to implement a proportionate regime. Whether or not that will happen obviously remains to be seen. And I would say that all of this is against a backdrop of one of the biggest shake-ups of retail financial services in the UK, which is the introduction of a consumer duty. And so that's not mentioned in the government proposals at all. But once firms become FCA authorised, if they are providing retail financial services, which buy now, pay later would be, then I'm afraid the consumer duty is also going to apply unless the FCA decides something different. In terms of how the rules can shape the space, I mean, obviously there's a real opportunity here to make this product as fair and as good as it possibly can be, and to really make sure that we're serving that customer need. I think that said, obviously regulation also serves a purpose around consumer protection, and I don't think we should underestimate the impact of regulation and what that will mean in practice. I think the government and FCA have been quite clear that they want to introduce friction at checkout. So there's a conscious decision that we need to introduce some form of friction by way of creditworthiness assessments, by way of provision of information, etc., getting customers to sign credit agreements. So that's one area where there'll be an impact, and whether or not that will cause drop-offs, customers to reduce basket value, remains to be seen. And then I think we need to think about the reallocation of responsibilities between the lender and the merchants. So Ayana mentioned Section 75. That makes the lender directly liable for breaches by the merchant. So if the goods are faulty, for example, then the lenders would carry that responsibility. So there certainly needs to be some thought about how those responsibilities play out in practice, and how that will therefore impact sort of relationships between lenders and merchants as things move forward. So I think it can have a really, really positive impact on buy now, pay later. But I think everyone needs to kind of engage in this consultation process to make sure we get the best outcome that we can.
Thank you so much. But do you think that the introduction of clearer rules will actually drive even more consumers to use buy now, pay later products, or the opposite?
No, I mean, I think on the one hand, having a regulated product creates legitimacy. It's almost like a kite mark that can build consumer confidence, and consumers do take confidence from the fact that products are regulated and that there is ultimately a regulator to whom everyone is answerable. So I think there is a real positive to come out of that. I think obviously the concern is whether or not the proposals around adding friction and the level of friction that's added are beneficial, whether that's going to drive people away. Because I guess one of the main benefits of this at the moment is it's a very quick and easy payment option, and consumers like that, right? And we want speed. We want to buy things when we want to buy them without sort of someone putting barriers in the way. So I guess if we get the balance right, then it should be positive, and I hope it will be positive. But it depends on where ultimately we end up.
Perfect. Thank you so much. And if you were to just to seek the consumer's perspective, maybe Faith can add some details here. What do you think, Faith? How confident are consumers in using buy now, pay later? And what would be their challenges, or maybe their fears when it comes to buy now, pay later?
Thanks, Ina. So I guess, there are some real kind of positive aspects to buy now, pay later products. And I'm sat here at Fair for All Finance, and we invest in affordable credit providers like CDFIs, community development finance institutions, and also credit unions. And, we've been looking and have started a pilot no interest loan scheme, looking at how can we give people access to no interest credit, because we know that for some people they can't afford to access loans that charge interest. And so, buy now, pay later is like a kind of mass customizable version of that, in that it's, and it's well liked with over a third of the population using it. It's got high awareness. It's highly attractive because it's convenient and simple, and it helps people get what they want and need. And particularly just in the terms of this sort of smoothing, it allows people to juggle their finances, to make things stretch a bit further, which obviously in this cost of living crisis becomes ever more important. I think it's interesting just to think about sort of the types of people that are using the product. So typically, we hear about younger people or young women especially, but actually I think some of the research shows that it's actually a lot more nuanced, and some research by Which shows that people who are using the product tend to be people with children, with a middle income, and who are less than 55 years old, with 25 to 54-year-olds being more likely to use the product than some younger people. And I think some people may be aware of some research I did around consumer priorities for open banking. And within that research, we showed that where people really needed help was around juggling their finances and reducing the cost of credit. This initiative, not initiative, but this product helps people do that. So there's some really good, value in this product that's helping people juggle their finances, stretch their stretch their money, but also reduce the cost of credit. And I think Bain did some research looking at buy now, pay later in 2020 and suggested that approximately 103 million was being saved in credit card interest costs. So there's some really kind of positive aspects to this product. And another one that I wanted to mention was just accessibility. So there is this sort of aspect of people who need access to small amounts of money, who would fail traditional credit profiling, being able to access some essentials and also some clothing, etc., through this model. And I think that begins to demonstrate that people are looking for something different, smaller amounts of credit that gives them more control, that avoid the sort of revolving credit cards and the interest rates. There's something there about how well it's working. But I think there are some challenges too from a consumer point of view in terms of affordability and in terms of whether or not everybody is a product that's suitable for everyone. And I think I can sort of elaborate on that now, Una, if you'd like me to, or you can come back to me later. What would you like me to do?
We'll get back to that later for sure. Yeah, thanks so much. Thank you so much for the insight. So I think we can all agree that the benefits for consumers are clear and are there. I mean, there's no doubt about that. But if we were to look maybe at on the merchant side, so we can all agree that buy now pay later's appeal to merchants is of course very, very palpable. So we were thinking, what has been maybe the impact of the pandemic on buy now pay later solution, and of course on e-commerce as a whole? Mike, can you please share your insights on that?
Definitely. We have seen that e-commerce has been growing rapidly and an increasing volumes due to the COVID. But similarly, side by side, the buy now, pay later and also more flexible payment methods has been increasing steadily. Based on our database, actually, the demand has evened out between different price categories. People are also using buy now, pay later for lower price categories, whether it's buying a product or even service. What has actually truly, exploded in a sense is buy now, pay later for businesses, B2B customers. And therefore, as a software company, we are offering this as an embedded finance directly to the merchants because they have constant demand and requires for more flexible payment methods for businesses as well.
Thank you so much. And yeah, what are the exact benefits for merchants?
Direct benefits for merchants. Well, of course, there are various benefits. I would say that it creates value. And as Helen actually mentioned, we could even say that this is like a mandatory evil in some sense as well. But since it's a standard payment methods, we have to react it. And there's opportunities, in my honest opinion, more than it's considered a mandatory evil, meaning that it can also create financial value, it can create operational value, and of course, there's a huge impact towards the customer experience. And there's a huge difference how you manage buy now, pay later and how you offer it to your customers.
Thanks so much. And Misa, what's your take on that? What should merchants consider when building a buy now, pay later offering?
Well, that list is long. There are various points, so I could list multiple things, but it's very important, in my opinion, to consider who manages the customer relationship, especially the post-purchase phase. Typically, if you operate with one credit provider partner only, you basically donate the customer relationship away. As a merchant, do I have any data available in order to retain the customer relationship? That's very important to consider. Where are my customers located? Now I mean the end customers. Do I have correct partners that I can operate accordingly and actually do responsible lending for my customers? We have seen among various players some, you could consider them stupid mistakes, that you haven't even considered that your webshop platform might be operated in one currency only. I've seen a web shop that operates only in euros, and 50% of the merchant's customers come from Sweden, where they cannot use Klarna, since Klarna only allows their customers to use Swedish kronors in Sweden. Have you outsourced most of these operations, and who controls the buy now, pay later transactions? And of course, if not the most important part, what is the customer experience when you're paying with buy now, pay later? Are you redirected from the checkout phase to a credit provider's phase website to fill out applications, and then you're expected to return? So there are multiple ways how you can actually make the customer experience better from the merchant sides. And one last thing is the costs. And similarly, this being a flexible payment methods, it's also the most expensive payment methods for both merchant and the end customer, depending on the market area, of course. So these are the main topics I come up with at this stage.
Right. Thanks so much, Mike. That's really good to know, and I think these are very good points. Misa, maybe is there anything else you'd like to add here in terms of consideration and what merchants should have in mind when they are implementing buy now pay later services into their products?
Yes, sure. First, thank you for having me here today. I would maybe touch on the point that is a main point of discussion today. It is regulation and affordability of credit affordability of the clients. So let's say for the merchant, it is important that the buy now pay later will help them to increase their average ticket size, to increase the conversion, but also it is very important for the merchant to choose a partner which has, let's say, a responsible lending practices, because for all big merchants, it is important to have also, let's say, a good, reputable partner and a sustainable partner that can have a sustainable growth, In this way, it is important how this topic about regulation and credit worthiness will develop in future regarding buy now, pay later. And from what we personally see, and we as a company, we strongly believe that only possible way forward is to be a responsible lender, meaning that some of the buy now, pay later should change their practices in this, So we heard a few minutes before about talking and discussing about the free credit. Emphasizing it is free, it is okay, but the thing that is free here is a debt. So people need to be aware that this is a debt. And like Helen said in the beginning of the introduction of this session, we have a tsunami of this growth and penetration in the market, and now over 15% of the UK population is using buy now, pay later, which starts to create a debt problem for some people. That's why, at least from my point of view, the thing that is a bit more important than being free is to have a proper credit assessment of the customer. And first and most is to check the customer's ability to pay this loan. And this is the only way how this industry will grow to 695 billion transaction volume in 2025, like Helen said. And for this, it is important to probably even consider credit files to integrate to the open banking, which I assume James will argue a bit more. And from this point on, to work together on educating clients that actually they're taking the loan. And probably what is the other problem is the structure of the credit instrument, where actually lies this fear about the interest, because we were used to use credit cards, which in the background has a revolving credit line, which is actually a perpetual debt. So if you put an interest on the perpetual debt, then there is a problem. So interest is not a huge and the main problem of the buy now, pay later. And I firmly believe that, especially now with inflationary pressures, there should be also buy now, pay later products with interest, but they should be installment-based products. And of course, if we have a proper assessment of the client, then we'll be on the safe side. And this is the only way forward how we'll help consumers, but also merchants grow with this product.
Thank you, Misa. These are really, really good points. So here I would like to maybe ask James what would be your views regarding the role of credit information in assessing affordability, and maybe you can also add some details regarding what opportunities are there to actually build better credit information, and how can open banking help and open finance help with that?
No, thanks for having me, and it's fantastic listening to everything. It's everyone who spoke so far has got a nice, realistic perspective on what's a big buzzword right now, right? Is buy now, pay later, and it's great to see the recognition around responsible lending in the conversation now, because it is developing, it is impacting a lot of consumers, and credit risk, affordability, whatever you want to call it, is a big part of any lending product, whether it's deferred payments or buy now, pay later or whatever. I think for a lot of reasons, though, it's not so much for me around full affordability checks and traditional credit scores. If you look at the way those models work, there's always, they're performance based, so they're always historical in nature. They can give you some historical behavior if you've been, really unfortunate or fallen into hard times and become bankrupt or whatever, then, definitely you'd want to know that. But in our experience of helping lenders use alternative data sources like open banking to help solve some of this friction or this concern around being responsible, understanding your customer, catering towards them, is very much a cash flow based question, right? Especially given all those messages we've just heard around convenience and ease and access and everything else. It's easy to fall into a trap of taking 10 of these products out today because I don't have a credit card and I've fallen on some stressful times. Maybe my fridge broke down tonight and I need to buy new shoes for my kids tomorrow or something like that. That the convenience and the instant nature of these transactions can drag me into a situation where I just can't afford it. And the impact on me as a consumer is really, really profound, especially if we do bring in some of this regulated activity around it. So understanding cash flow and that near term, the probability of someone's defaulting on that, the financial distress that the person might be under, their financial wellness, looking at their cash flow in the near term, I think is absolutely critical. With our own categorization engine, we've trained it to look at buy now, pay later as a deferred payment method, essentially, not just a loan, but to segment the market so that we can help customers, lenders, understand how much that compound effect is having on someone's potential to pay back, not this month or next month, not 6 months from now, but that really critical 2-3 month window. And matching that with cash flow and in terms of in regards to near-term credit risk.
Fantastic. And what do you think that maybe if you look going back to affordability, and do you think that affordability and credit scores will help buy now pay later become more inclusive? Because here are the papers, and Helen as well has been talking a lot about so far about open banking for good, and now we see that we're talking about buy now pay later for good, and we'd like to see how will a credit score and affordability make buy now pay later more inclusive.
It's a credit risk decision at the end of the day, isn't it? We're just, whether you're offsetting some of that risk by backing it onto a credit card as some of the models go, or whatever it is. For me, buy now, pay later sits in the middle somewhere between a credit card and a loan, right? It's a payment method. You're doing it at checkout. You're taking on, as Misa kind of described there, you're taking on that risk at that point of transaction. And affordability and responsible lending and understanding someone's financial distress or their financial wellness is critical in that situation. And I struggle to see if there's any other way of solving that problem other than open banking. I mean, I am biased. I'll put my hand up to that. But because it's such a real-time environment, we're not talking about a product I took out 6 months ago or 6 years ago. It's not something I did over the last 3 to 7 years. I've not been building up a credit profile. And then as Ayanna talked about as well, if we also think about the movement from traditional credit products like credit cards into buy now, pay later propositions, the reliance on those traditional methods even more so disappear. The traditional credit bureau data that we've used for a long time just doesn't apply. So how else do you create that real-time check that helps protect the consumer, helps protect the industry, and help protect those propositions that are trying to help people access those funds as and when they need them?
All right, thank you so much. Excellent. Yeah, open bank is very much close to our heart. So we really think that it's going to have a great impact for not only for consumers but for businesses as well. So we're very much on top of things when it comes to open banking and buy now, pay later. So yeah, I mentioned circling back to the point that I made regarding financial inclusion, and I know that buy now, pay later at this point is very much seen as a stepping stone for financial inclusion. So I was just thinking, what more is needed from buy now, pay later to ensure good customer outcomes, or better yet, what do we mean by good customer outcomes? So yeah, who'd like to take this one?
I'll take it. So I think, there are lots of positives about buy now, pay later products, but as we've heard, there are also lots of risk for consumers. And even if we think about affordability checks, they're one thing, but there aren't any strict rules around affordability. So there are going to be choices that providers need to make about how close do they take people to the wire before they say, actually, we don't think this is affordable. And so I think, when we're beginning to think about affordability, does that include a buffer, for instance, in terms of making sure that people can actually afford the product over the course of it and are better off for having had access to it rather than not better off? And I suppose just there are a few things that kind of came to mind beyond sort of the regulations, which I think it would be useful for us to think about. One is just what is the social responsibility of firms towards their end users? So not just the merchants that pay the bills, but actually the responsibilities towards consumers. And we talk a lot about ESG, environmental, social governance reporting, but what's the S for buy now, pay later lenders? What's the S? How do they put that into their mission statement? How do they make sure that that's being delivered? And then also, how do they monitor that? So one of the things that I find quite often in financial services is that firms are not monitoring the outcomes that they're creating downstream for consumers. And this is a particular market where it's going to be important to really understand the consumer. The Which research showed that lots of consumers who are taking out buy now, pay later products are people who tend to have different sorts of behaviours. So they're time poor, they're present oriented, they're more trusting, and that begins to say, okay, when we're thinking about the design of products, then what does that mean? How do we design the product so that it's much more in keeping with what people might need? So designing a little bit of friction in there so that actually people can understand the product and make sense of it. And then also not just, it's a lending product, but how does this affect me? What's the impact? And that's actually what's required through the Consumer Rights Act, that people are able to internalise the decisions they're making, see how it applies to their situation and whether it's going to be better for them. And so that's a kind of key important point. And one of the things that we're doing at Fair for All Finance is that we have developed an affordable credit code of good practice, and it would be useful for firms to think about how close are they to this and to this sort of standard. What's their affordability assessment? Are they providing a buffer? How transparent are they? What's the wraparound support they provide to people? How do they respond when people get stuck and need help to repay? What's the sort of response there? And how can they really help people get back on track without it having a sort of devastating impact? And so we think there's some things there around really how can firms think differently about their social responsibility to end users, about their design of the products and how they design ethically, that they're not looking to sort of build on every behavioural bias that we have to get as many people through the merchant process to make as much money as possible, but actually they're thinking about what do we need. And I just wanted to highlight one thing as well, as around the planet. We are driving ourselves into kind of like, well, I suppose the extinction, isn't it? That we have rising climate change. We do need to reduce our consumption drastically, and buy now, pay later is exploding our consumption. So I'm interested in thinking, well, how does an S make sense for buy now, pay later lender, and also for a merchant? Does that look like, okay, we'll think about the products that we're putting this on. We'll think about how we can divert people to more green products. So how is E and S being worked out for those lenders? And then particularly in the day-to-day, how can lenders think differently about people's needs and how to meet those needs? So I think there's quite a lot of work for this market to be doing to shape up a product that can maximise the value that I talked about earlier, but also mitigate some of those risks that we see, especially with this cost of living crisis coming, where people might be overstretching when actually that's not in their best interest.
Thanks so much, Faith. I think
just add one thing? Yes.
Sure.
So, in assessing credit risk, there are actually two important things. First is assessing the ability to pay, which we discussed mostly today, and where we agree that probably the best methodology is the cash flow methodology, what James described, compared to the old-fashioned historic methodology. But the second thing is assessing the willingness to pay of the consumer. And in this, of course, we can also use open banking, where we can see if people are actually regularly payment of the utility bills or something else. But what is more important here actually is probably reporting those transactions and credits into the credit bureau itself. 2 or 3 days ago, we saw that Klarna actually announced that they are going to report their transactions there. And why this is important? For two things. First, it will actually force people who are not so responsible, to be more responsible and to pay on time. But the second thing, it will actually impact positively on the financial inclusion, something that Ayana said in the beginning. So when this will help buy now, pay later users to be reported in the credit bureau, so probably then after some big financial institution could issue them mortgage loans, So this move by Klarna is actually very good for the development of the industry in the following time. And from my point, this is the thing that should be followed by others on the market.
Thanks so much, Misa. And going back to what Faith said, she mentioned value at some point. So I think value is actually the key word here. So I would like to ask all panelists, just in a few seconds, what would be your recommendation and suggestions for all players involved in the buy now, pay later ecosystem, so that the full value of buy now, pay later is realized? So maybe I can start with you, Joanne.
Yeah, sure. I mean, I think for me, it probably leverages on what Faith was saying around kind of understanding how the product is used, what the real benefits of the product are, but what the pitfalls are, so that we can make sure that we're avoiding the pitfalls. And I think that's what the UK is doing with the proposals around regulation. So it's making it fair. This is a great product when used and sold fairly. So it's about creating that fairness, I think.
Thanks so much, Joanne. What's your take on that, Mike?
I would really advise merchants especially to consider, basically, as Joe has said, consider what your customers are actually buying and how they are paying for it, how they are using this payment method in a whole, and then combine that which players you select as your own partners, or is there a way that you could actually manage this on your own as a merchant?
Thank you. James, what's your perspective? What would be your recommendation?
Well, as someone who's been in the lending space, not necessarily the buy now, pay later, although we have a bunch of customers in that, and the whole range of products, I think, a lot of what people are saying here today is just be responsible with it, is find that middle ground, that balance between helping consumers get access to the finance when they need within their means, right? And be responsible. And a big part of that is looking at affordability and risk, but also like fraud, the probability of the defaults and the responsibility to pay and that sort of thing is all really interesting. I think the other thing, building on what Faith was referencing there around the climate challenges we have to think forward a little bit as well. You know, buy now, pay later works really well when money is cheap because it's not free. We pay for it. Somebody pays for access to these products, but nothing is free, right? So as interest rates go up over the next year or two, and those margins get squeezed, as costs go up, as regulation comes in and puts further burden on these organizations, we have to look for better ways to do to operate, right? The lenders need to look for alternative data sources like open banking or whatever it is that you've decided to use to make those easier, faster, lower risk decisions, because the pressure, I think, is just going to increase over the next 12, 24 months as the access to this money gets squeezed quite a bit. And then you have to start to think, is there a bit of a bubble around this form of payment, this deferred payment method, and how do we prevent that bubble from collapsing?
Thanks, fantastic. And who else would like to share their recommendation?
I was just going to add one thing, Ona, as well. Is that it's in terms of just building what James said around responsibility, being responsible. I think most of us would feel like we're being responsible and we think about our design of our products. I'd just like to encourage any companies that are involved to either get in touch with me or get in touch with other consumer organisations who actually work directly with vulnerable people. And because actually they can challenge you on the design of your products and really push you much harder to make sure that you are being as responsible as you think you are and picking up some of those unintended consequences. So in terms of actions, I'd love to see firms actually getting in touch much more with organisations, civil society and charities that work with people with lived experience of vulnerabilities to really make sure they've understood the client base, how buy now, pay later can help them, but also how it might be causing harm and what firms can do better to look after those customers.
Excellent. Misa, I think you wanted to add something as well.
Yes, very short. So James said most of the things, but once again, from my point of view, being a responsible lender and being able to fairly price the debt is more important than offering free debt. And I think that all buy now pay later players should consider this. And there is opportunity for next evaluation phase of this industry if we want to reach 600, 700, $3.3 trillion market size in global in next 10 to 15 years.
Thanks so much, Misa. Yeah, brilliant way to close this top-notch panel. So I think we all agree that buy now pay later services have reached new heights in the past year. So we're very much looking forward to see what's next. Thank you everyone for a very interesting discussion today, addressing the bad and the good and bad in buy now pay later. I really appreciate your insights here. A virtual round of applause to all of you. And now, it's time to shine the light on two. And without further ado, Edward, are you ready?
Absolutely.
Fantastic. So you have 1 minute to share your elevator pitch and the most successful use cases so far. So fingers crossed. And ready? 3, 2, 1, go.
When it comes time to make a purchase online, you've got really 3 options if you're buying as a business. You can either pay by cash, which is effectively a debit card, you can pay by a credit card, or you can just get out, put the computer down, walk out to the store and buy it in person, because there is no third option right now in the online space for B2B, or there hasn't been for a long time. Why is that? Well, if you look offline, there's really only one way that anybody ever buys B2B, and that is via invoice. But that option just isn't available in any meaningful way online. What we allow at 2 is we allow a buyer to buy on behalf of their business instantly in as little as 1 click on buy now, pay later terms, 30, 60, 90 days, or indeed annual installments, revolutionizing the world of B-commerce, B2B e-commerce.
Well, thank you so much. Very time boxed. And now, can you tell us in 1 minute again what challenges your use cases is trying to solve, and why is it important for consumers? 3, 2, 1, go.
If you look at B2B commerce just globally, on or offline, it massively dwarfs, it completely dwarfs B2C transactions. You look in the online space, and that relationship is inversed. The penetration of b-commerce into the online space is minuscule, relatively speaking. It's because fundamentally of several things, but at the heart of it, it is the lack of a suitable payment method. So if you can repurpose any B2C methodology you like. Shopify works just as well, whether you're selling one iPhone cover or a pallet load of them. It's the same for FedEx or for any other shipping or logistical management systems, and indeed the same for inventory. When it comes to payment, though, if you don't offer buy now, pay later, you're effectively shutting out almost all your customers. And this is why we see just very little penetration in the online space for b-commerce.
All right. And how do you think your use cases can evolve in the upcoming months? Ready, steady, go.
Yeah, it's hard. That's hard, isn't it? That countdown. All right. How's it going to evolve? Well, it's pretty straightforward. Several things get unlocked once business starts to move online and businesses start to transact with each other online. But probably a key one, and this ties in with open banking, is that what we allow is for a heavily underbanked sector, under-levered sector, to finally get access to those first steps of credit, and that is SME space. It costs a lot in terms of compliance for a bank to make a loan to a small business, and so they frequently just don't do it. We effectively are providing microloans, but what do those microloans allow these buyers to do? It allows them to build up that credit, to show a credit history for the first time, and then to get access from these early repayments, steady repayments of invoices to longer term forward-looking financing.
Thank you. And yeah, we have another one for you. And why is e-commerce, in your opinion, for instance, B2B commerce, so underpenetrated in the B2B space versus its retail e-commerce counterpart? Ready?
So there's been considerable underinvestment, and that underinvestment has come from the simple fact that the people that have tried to make initial forays into selling online B2B simply haven't been able to pull it off, because when it gets to checkout, the relationship collapses. What happens is a basket gets loaded up with, say, £50,000 worth of, TVs to buy for 50 rooms in a new hotel. Get to the checkout, and what do you ask for? Cash or credit card? Nobody has cash to pay for that necessarily. And when it comes to a credit card, credit limits are unlikely to stretch that far. So what happens then is they pick up the phone and they call customer support. And customer support is simply not set up to make these kinds of decisions on the fly. The relationship breaks down, and then, of course, the transaction is abandoned. So the lack of a suitable payment method, the ability to simply assign credit and send the invoice to your finance department, is what's been holding back e-commerce.
All right, thank you. We're not done yet. So we've been talking about financial inclusion for consumers. So I would like to ask the following question. How can open banking improve financial inclusion for businesses this time, especially in the SME sector?
There was an EU report about a year ago that outlined that there are 6 million jobs that should exist but don't exist right now. And they don't exist because the money that would be used to hire those people is being tied up in working capital. Now, the inclusion of open banking into our product, what that allows us to do is to offer credit instantly to companies who don't have any credit history or even any records whatsoever. So you might be a well-capitalized company, might be cash rich, but because you haven't made any reporting whatsoever, because you're too young, too new, you don't get any credit, and therefore you're having to lean on that cash rather than conducting business in a more straightforward invoice manner. So a simple click to authorize us to look at your banking records allows us to make an instant credit decision and to offer you the credit that you deserve, but that the traditional credit bureaus just simply are blind to.
Thank you. And the last one, what surprising impact has implementing open banking had on your business?
A critical component of B2B transactions or B-commerce is that there are two entities that are entering into a contract. There's the human user who is at the checkout, loading up the basket, but that person isn't making the purchase. They're doing it as an agent on behalf of a business. Now, if you want to succeed in online sales, you have to focus on conversion. And conversion is a factor, is affected by many things, but keystrokes, page redirects, page load times, clicks on your mouse, all impact your sales. And the more that you ask of your buyer, the less you're going to get out of them. So what we are able to do is we need to know exactly who we're dealing with. What we can do with open banking, which is very surprising, is we can use it as a proxy for a digital ID. And what we do is we allow you to authenticate against your personal bank account. We don't take any details whatsoever. We don't care actually about your bank balance. We just need to know that you are you. And the bank has seen your passport, so we don't have to. And it makes it allows us to implement that in a click.
Thank you, Edward. That was fantastic, and I think we're all enlightened. So now, thanks everyone for a great discussion today. It's been really, really, really amazing and insightful. And with that, I'll hand it over to Helen. Thank you, Helen, for letting me be part of this.
Oh no, it was amazing. Thank you very much for being our guest host. I remember arranging this with you. It must be about a year ago now when we're at Money 2020. So hopefully I will be seeing you back there this year.
Yes, we'll be at Money 2020 this year as well.
Fantastic.
We'll see you there.
And I would just like to say, Ed, you absolutely nailed it. Well done, you, seriously. And I'd also like to say a huge thank you to all of the panel. We have had, and I think James used the conversation, a mature, James used the expression, a mature conversation around responsible lending. We've talked about the part that open banking has to play, the significant part that it has to play in being an enabler. We've talked about sustainability, responsible lending. We've talked about some new business models as well. But the big theme and the big takeaway from me is that this has been a balanced conversation. You know, when I said this conversation is often like an Oxford Union debate and opinions are very polarized, today has been very mature, very balanced. And it's all around everybody being responsible and everybody wanting to be responsible. So I think that's a key message. And I think that open banking has a huge part to play in facilitating that enablement as well. It's certainly a conversation that we will be continuing. And I have no doubt this is a market we'll be hearing a lot more about. The Wolf Report and then the legislation that's coming online, it's just the very, very beginning. So I'd like to wrap up with just a really heartfelt thank you from Riyadh. I'd also like to thank the OBE team who work immensely hard behind the scenes. And for this campfire with me being away, they have actually shown that they don't need me, to be fair. So I might just stay in the sunshine. No, but seriously, thank you very much to everybody. They do a sterling job. A lot of what the OBE team do is behind the scenes. Credit to Nikki, Kaylee, and all of the team, but they're the two that handle our campfire logistics. They will be sharing everything that you've seen today, the results of our online poll, throughout social media. We will, of course, be sending it to you all with our newsletter. And we will be sharing all of this content with our speakers so that they can also post it and you can get more out of it the second time you hear it. I would ask that you share it as well. So all that remains is to thank you for tuning in and to wish you a fabulous evening and be happy and be very, very healthy. Take care of each other. Bye for now. Thank you.